The Dow shakeup from yesterday evening. Here with our trades, Boris Schlossberg, BK Asset Management's Managing Director of FX Strategy, also a CNBC contributor. Up first, Boris, welcome. Amazon replacing Walgreens Boots Alliance in the Dow Jones Industrial Average. That happens next week. What is your trade on Amazon?
Well, Amazon, I think, is a very interesting trade. It's basically moving now away from all the gains it's made in AI in its AWS space and applying all the knowledge now into their retail business space. Andy Jassy said that they've been able to, I think, reduce their cost to serve by 45 cents per unit, which really increased their margins. Their margins actually went from negative to 6%, a five-fold increase over the last couple of quarters. That's very, very impressive. Then they have this new AI chatbot called Rufus. It's going to be essentially a shopping assistant that people seem to really, really like. Initial reviews have been very positive. You can imagine the amount of AI and data they're going to gather on their customers. My view with Amazon, I think it is one of those companies that could create a trillion-dollar business selling services as well as goods, perhaps travel, perhaps healthcare. So there are markets here that markets haven't even thought about that Amazon is going to enter. And of course, their focus on this one-touch life, which is what they really try to customize for all their customer set, very attractive, and I think that's what puts them, into leaderboard for the future to see.
So this is a buy in your book. Let's move on to the one that Amazon displaced from the Dow, and that's Walgreens Boots Alliance, booted for Amazon. Could this be the sign of the bottom in this stock, or what?
So it's very tempting to say it's a bottom. A lot of times when stocks get flipped out of the Dow, they actually do very well. Exxon did well, GE did well. The big problem here is that they have a huge amount of debt on their books. It's a 3.5 times levered company, and their cash flow is negative. So to me, yes, they've had management changes now. They've cut their dividends, so they're really trying to stem the bleeding. But the business is moribund. And I think really for the investors right now, you'd want to see at least 1 to 2 quarters of positive cash flow before you want to dip your toe in the water. You don't want to be, buying a sort of a false bargain. This could be a value trap for anybody who gets into it right now.
That's a strong caution there. Let's move on to one that, well, maybe some people think ought to be in the Dow, and that would be Eli Lilly.
Yeah. Well, that's my argument. My argument is that, I think the GLP-1 is bigger than GPT-4 right now, at least for the immediate future for our civilization. And the Mounjaro, drug is going to have massive effect, not just on weight loss, but heart disease, liver disease, perhaps even mental health in terms of controlling impulses. So there are analysts who think that Lilly will quintuple their earnings to $50 a share. Now, is the stock overbought? Absolutely. Is it overvalued? I don't think so. And for that reason, I think you have to put it into the Dow, given the fact that it's one of the dominant stocks within the single biggest industry within the U.S. economy, which is healthcare. And the fact that it's not there, I think every single day is a miss. It will be a huge growth, and it's going to change our lives as we go forward.
Strong endorsement for Eli Lilly. Boris, always great to see you, sir.